prices. The war in Iran, of course, having a direct impact on gas prices across the U.S. We've seen that from the beginning because of all the oil that moves through the Strait of Hormuz. An estimated 20% of the world's oil supply doesn't supply the U.S., but it supplies other parts of the world, and those markets are a global market. It's a domino effect. Oil hit a 4-year high now, surging past $125 a barrel. Gas prices in Minnesota rising above $4 a gallon. From late February, it was just under $3 a gallon when this war began. So joining us now is Patrick DeHaan of GasBuddy.com. And I was just looking at the most recent blog on your site where it really specifies here, pardon me, I got to pull this back up, the way it differs across the country. You have the states with the lowest average prices: Oklahoma, Kansas, Arkansas. The highest average prices: California, Hawaii, Washington. But the biggest changes in some Midwestern states: Michigan, Wisconsin, Ohio, and Iowa. What are we seeing here about the regions that is different here, particularly kind of the Great Lakes and Midwest region?
Yeah, well, the Great Lakes, and from the energy market perspective, everyone defines Great Lakes a little bit differently. But the way the energy market describes the Great Lakes is essentially states that touch Lake Michigan. That's because Chicago is the key market that underscores prices in that market. The Great Lakes essentially being Michigan, Indiana, Ohio, Illinois, and Wisconsin. And again, it's all that's how the energy market describes the Great Lakes. And it's that Chicago market. It's those 5 states that are seeing the biggest surge in prices because of refining issues and the market that underlies those 5 states. A major refinery losing power late Sunday night in Whiting, Indiana. That's in Northwest Indiana. In addition, another refinery down near St. Louis has encountered during maintenance an unexpected disruption, and another refinery in Joliet, that's outside Chicago, also rumored to be having some refinery issues here. Now, maintenance is normal this time of year. What's not normal is when you have so many issues the last couple of days, all in very close time frame, really made worse by the fact that the Strait of Hormuz now expected to be closed for an extended period, and that pushed oil prices up 8% yesterday. So all of that put together is leading to some pretty big surges in prices throughout the region, and that's starting to bleed into areas like Iowa and the Twin Cities as well.
Yeah, and you mentioned with the Strait of Hormuz, I'm reading here that that you have read that average gasoline prices rose in 39 states over the past week. And certainly we've seen them go down, seen them come back up, with news related to the Strait of Hormuz opening, closing, slowing, opening again. How much is that kind of playing a part? I would imagine a lot in sort of this up and down that we've seen at the pump.
I mean, that's really it. The pendulum swinging depending on the news of the day. That is, when President Trump and Iran had signaled that they were going to reopen the strait, we saw oil plummet. And gas prices plummeted for about a week and a half until it became relatively clear that that wasn't going to happen and that we returned to escalations. And now President Trump yesterday talking about an extended blockade for several weeks. And that's what has oil markets now going back up. So much of what you and I are going to pay in the weeks ahead is going to be very contingent on new developments. Will the strait reopen? To what degree? How quickly? Is there going to be joint agreement? Or what things look like? And that's really what's going to dictate gas prices this summer. We could see prices remaining above the $4 a gallon mark until the Strait of Hormuz is fully addressed or fully reopened.
And also, we are just shy of, about 3 weeks away from the Memorial Day weekend. Typically, we always see gas prices go up ahead of that for the expected travel. And, how much is that maybe even playing into what we're seeing happen now?
Well, typically gas prices peak in April or May, and then they start declining as we get closer to Memorial Day. And a lot of that reason is because prices don't peak in the summer, but ahead of the summer when all of this maintenance is happening. Once this maintenance is done and over in the next few weeks, it's going to be refineries cranking up output as much as possible. And that usually contributes to gas prices that decline as we get closer and into the summer driving season. This year could be a bit abnormal, if the Strait of Hormuz continues to be closed. We could continue to see upward pressure on gas prices until the Strait of Hormuz is completely addressed. So, once refinery maintenance over, we may see a little bit of relief here temporarily towards the end of the month. But the bigger question is, how long is the strait going to remain closed? Because the longer it does remain closed, the more oil that's not going to be delivered that normally would be, and the more global oil inventories are starting to decline. And by the way, that is something that we're now seeing in record levels. U.S. oil and refined products, well, in the last 7 days, nearly 100 million barrels of oil and gasoline, diesel, jet fuel, and other oils has left the United States. Other countries are buying up our oil. That's reducing our inventories and causing prices to go even higher.
Yeah, I mean, you can look at that a couple different ways. I mean, we've got oil. The president even said we've got plenty, come buy from us. But again, more demand means higher prices on the same supply. So, all right, thanks so much for joining us to try to provide some clarity here in this. And it's certainly a tough thing to constantly keep track of. But appreciate you giving us some insight.
You bet. Thanks for having me. Appreciate it.